I'm John Janarone, Editor-in-Chief of IPO Edge here at the New York Stock Exchange for the 2023 IPO Summit. We have a really exciting guest about to join us here. This is going to be Evan Speece, who's the CFO of Doral Renewables. This is a US-focused clean energy company dealing with storage, wind, solar. We're going to talk a lot more about that. Its parent company happens to be listed in Israel, but their operations are all here. Evan, thanks for joining the program.
Thanks very much for having me. Appreciate it.
Great. Evan, tell us a bit about your background before we talk about Doral. How did you come to learn about the company, and you know, some of your so tell us about some of your areas of expertise that you're putting to work here.
Sure. So I've been with the company for about 2 years as CFO. I joined the company from Clearway Energy, which is a publicly traded company as well, under the ticker CWEN. There, I left the company. I was Vice President of Finance and Head of Capital Markets. Spent about 7 years there right after the company was actually taken public, and served in a variety of finance and strategy roles and helped grow the company as it scaled, and ultimately did a majority sale to a company called Global Infrastructure Partners, big private equity firm based in New York, and then was enticed to come over to Doral and basically help build a new renewables developer in this space.
Great, and the company's only been around 3.5 years, but you guys have already accomplished quite a bit. Can you tell us a bit about that? I mean, I think we're talking about 20 different states where you are or plan to be, right?
Yep. We're very excited and happy with the progress. Of course, a lot more to do, but the company was founded by our CEO, Nick Cohen, who formed a joint venture with the company you referenced called Doral Group, which is based in Israel. Nick is kind of a serial entrepreneur and also has spent a lot of time in the renewable energy space, both private and public. And he knew the Doral Group folks from developing projects in Israel. So the basis of the company was focused on relationships with landowners, farmers, which are called the kibbutzim in Israel. And the idea was to basically bring those relationships and that culture and that responsibility to our farmers to the US. And so that led Nick to found a project that is called Mammoth Solar. It's our landmark project. It's 1.3 gigawatts in Indiana. And Nick started that project about 3.5 years ago. He still knows all of the landowners by their first names. So as you can tell, that part of the development of our projects is very important to our DNA. Since then, as you referenced, we've grown pretty tremendously. So almost 50 projects across nearly 25 states now, about 10 different power markets in the US. And happy to say that we have almost 2 gigawatts that we're about to bring into construction over the next year, and several more gigawatts behind that we expect to bring into construction over the next few years. So really steady growth, and it's been an exciting time to be at the company.
Great. Well, you know, on our program here, Evan, as you might guess, we interview clean energy companies all the time. There's so many of them out there. Can you tell us how you're differentiated from some of the other players? But at the same time, I might ask, isn't there room for plenty of you guys? I mean, there's just so much need that maybe it doesn't need to be like a winner-take-all situation.
That's exactly right. There is a ton of green space, a lot of different strategies, and many tremendous companies in our space. And, you know, frankly, because there is so much green space, we really share a lot of information and ideas with each other. It's a pretty collaborative space because paradigmatically, we're all trying to solve the same problem, is climate change. And so that's one of the really fun parts of the industry, is that even though it is competitive, we're kind of all growing together and learning from each other to a certain extent. With that said, I tend to focus on 3 areas that I think are important for us to be able to differentiate ourselves. One is people, the second is markets, and then the third is scale. With respect to people, I talked about our relationships with farmers and landowners, and that really is core to what we do. We think a lot of the work that we do in that area is different than how other developers manage their relationships with farmers. The second is my CEO, Nick, and I were very focused on a top-down hiring philosophy. And what that means is that we have a lot of folks that have worked together at other companies in the space, who have even know each other from previous companies, and that have, you know, a decade plus of experience in the industry. So we're not dealing with people that are, you know, fresh out of college for the most part. It's people that have really been around the block and know what we're doing. And what that allows us to do is be a little bit more competitive in terms of hiring, but also it keeps our G&A as a percentage of EBITDA and megawatts very low. And that management of cost is really important to the inevitable cycles that you face in different capital markets and macroeconomic conditions. And so that really helps us in the people space. The second, in terms of markets, so we're focused in power markets where we think that we can get very good core power pricing, but also long-term upside in terms of merchant capacity, which is something that's pretty unique to our investment strategy. And then secondly, we do a lot of work upfront to qualify our projects. So what we want to do is the highest amount of throughput of projects in development at the lowest possible cost. That's really the strategy for development in a lot of different markets, not just renewables. And so how we do that is we spend more time than most folks in terms of the early part of the cycle of development, making sure that when we tell a landowner, an investor, or a financier that we have a project, it's going to be a real project. And then the last is scale. So we build very large projects. We think there are increasing economies of scale and returns to economies of scale in our industry. And that comes along with also relationships with large capital providers. So last year, we closed a deal with Apollo that gave us availability of about $500 million, which will help us to grow our business. But also Bank of America committed to about $600 million of tax equity investment in our project. So that type of scale is increasingly important in an industry that's becoming more and more competitive.
I've got you. Now, speaking of that deal last year, I was just about to ask you about that. The financial markets are a little bit shaky right now, but is it easier for you guys to get a deal like that done because these are hard assets that's behind what these loans that are being made? Just tell us about how the climate feels right now.
I think that's right. I definitely wouldn't say that it's an easy climate, to your point, but one of the benefits of having, like I mentioned, people that have been through different cycles in the market is, we know how to navigate these types of cycles.
Yeah.
And we stay very patient, right? One of the things that we're very fortunate with at Doral is that not only with Apollo, but our founding partner, Doral Group, and then an insurance and pension company called Migdal that owns 20% of our company, they're very long-term investors, and they understand that things are going to change on any given day, not only with our projects, but with the markets. And so they're not necessarily reacting to what happens on this quarter versus next quarter, not only in terms of our results, but where the markets are broadly. So what we want to do is control what we can control. And we think that if we build a company that's tried and true to the principles that we're really trying to build a company upon, that we'll be successful in nearly any market cycle, and we'll be able to withstand the inevitable downturns that come. With that said, I actually view what's happening right now as a little bit more of rationalization than anything. I think the last couple of years, I hate the word frothy, frankly, but I do think that some of the valuations were a little bit in excess of maybe where they should have been, not only in our industry, but in others. And so, we'll take advantage of those dislocations where we can. But I think, to your point, what Apollo saw and what our other investors see is that we're building real assets. You can see them on the ground, you can see the solar panels, you can see the energy they're producing and the revenue that they're going to produce. So that makes it a little bit easier to navigate these market rationalizations or corrections.
Gotcha. I got to ask you something, Evan. As someone who's at an innovative green energy company, what do you make of the steps that the big oil companies are taking to try to do some of what you guys are doing? I mean, I'm guessing you might be supportive of it, right? Because as you said before, there's probably room for a lot of folks to do this.
I think that's right. There are crossover investors across a lot of different spaces. And I view the oil and gas companies as starting to turn in the long term, not only in the short term, to focus on renewables. However, I think there are challenges for especially the larger oil and gas companies from a cultural perspective to change on a dime and just say that this is going to be a huge part of our business. So while I view their aspirations as good for the climate, good for the world, and frankly good for our space in a lot of ways, I think they're going to be a competitor that's important as we go forward, and that will capitalize on the green space that I mentioned that we're all looking at. But I do think that there is still a lot of space for non-oil and gas companies to expand and grow and succeed in this industry. So welcome them as competitors, and I'm sure they'll do a lot of great things, and they have certain competitive advantages, but I think they have some disadvantages relative to us as well.
Great. Now let's turn to the topic of the day, IPOs. So here we are at the New York Stock Exchange. The IPO Summit's just wrapping up. What are your thoughts, not just about you, but about the role of public markets for renewable energy in general? I mean, you've done you've done a great job of raising money. I think $2 billion, right, in total. So, it's almost like maybe you should stay private for now, but just tell me what your thoughts are.
Yeah, I think one of the important things that was discussed in the summit today, and that I always tell my team, is that an IPO is a very important step for a lot of reasons, but it's a step along the journey of a company. And it is, in many ways, just another step of capital formation, similar to the $2 billion that we've raised previously. It may come with more fanfare and more publicity, and what I really think about when I think about the IPO process is discipline. It forces us as a company to mature in certain ways that are, my CEO and I talk about it a lot. It's things that we should be doing anyway,
Yeah.
that we want to do as we grow as a company, but are necessary if you want to meet the rigorous standards of what's required to be a public company. I think the other important thing is, in our space, you need a lot of capital to build those hard assets, especially if you're going to try to access the economies of scale that we talked about, but you also need flexible capital. And one of the things as head of capital markets at Clearway that I really focused on was the US, institutional markets are excellent from a private perspective, but publicly there is no comp anywhere in the world.
Yeah.
In terms of how deep they are, how liquid they are. And I will tell you, from having raised private capital versus raising, high yield debt at my previous company, it is a lot easier and faster to raise money once you're public than it is to raise the same quantum of capital when you're private. And for a company like ours, we do both project financing, structured financing, but we need a lot of, public market-driven financing in the long term as well if we're going to succeed. And so the IPO is very important from that perspective. The last thing I would say to go back to what you were mentioning about oil and gas companies actually is I think we're in the very early innings in terms of renewable companies tapping the public capital markets. There are a few companies out there that have done a great job of it, but it's really quite small compared to the overall valuation and capitalization of the space as a whole. Whereas if you look at the oil and gas space, they've been prolific in the public capital markets for decades. And I think that the renewables market will ultimately end up where the oil and gas companies and the master limited partnerships have been for many years.
Yeah.
And so I think we're primed to really access that capital and that investor base. And we need to help them, educate them on kind of the benchmarks against which we should be comparing ourselves to those, tried and true, companies that have succeeded in the public capital space.
Makes sense. I was not going to ask this question because I thought it was too niche, but now I will. Master limited partnership, could that kind of a structure work for a renewables company like yours? I mean, it's very, very popular with petroleum, right?
Yeah. So yieldcos in the renewable space have been around for probably a decade at this point. And my former company was very similar to that. I think there was an IPO recently in the renewables space, so we're what's called more of kind of a pure play renewables developer. So we initiate the development of a project and we take it all the way through to ownership and then maximization and optimization of profit over the long term. The MLP space is more focused on kind of a sponsor and owner relationship whereby the developer is separate from the owner of the assets. What we're trying to build is really more of an IPP 2.0 type focus, if you will. And we think there's space for that in the markets because we think the investor base is really starting to understand more of what renewables development entails. And I think when you boil it down to ultimately what the capital markets are all about, risk versus return, there's not all that much difference between the MLP yieldco space and the developer space. I think there just needs to be a greater elucidation and understanding of what the risks are and where the capital is coming in on different parts of the risk spectrum.
Gotcha. All right, Evan, I'm just going to give you one last question. We'll kind of leave it open for you. What are you most excited about in the next several months here? I mean, I'm imagining you're going to keep busy structuring capital. The next round will be coming soon enough. What's on your mind? What are you excited about?
I'm really most excited about our projects. As a developer, so to speak, of course, I'm more on the finance side than the true development side. Our Mammoth Solar project, the first of the 3 phases of that project is under construction, and that will hopefully come into operations in the fourth quarter of next year. That's 400 megawatts by any standard. That's a very large project. We have 2 phases behind that hopefully we'll be starting construction on over the course of the next 6 to 9 months. And then we have several other large projects in the pipeline that we'll be beginning construction on. And really the the happiest day in a developer's life is the day that you start construction and then ultimately commercialize a project, because you get to bring together everyone from the company that has worked so hard, the landowners, the farmers, the communities in which we operate, and you see the smiles on the faces and how impactful it is to the environment, to those communities in terms of the tax base and the economic revitalization in terms of where we're developing. There's nothing that makes my job easier than when you have those days, and it really brings you right back to why we're doing this in the first place. So I'm most excited to bring some of those projects into construction and online, and that just keeps rejuvenating and recycling all the energy back into what we're doing.
All right, Evan. Well, that's a perfect place to leave it. This is Evan Speece, who's the CFO of Doral Renewables. I'm John Janneron of IPO Edge, signing off.